I'm Chris Drayer, CEO of Revaluate.
Sure. I'm Jason Frazier. I'm the EVP of Growth for Lead Pops, but I'm also a strategic advisor to Lender Price and Victorian Finance.
Jay?
And my name is Jay Voorhees. I'm the founder of JVM Lending, and we're a very tech-forward lender because we don't have loan officers and we can get immediate tech adoption with everything.
Look, I mean, I think on average we tend to do about 5.5 million real estate transactions in a given year. It's running at 1.3 to 1.5 trillion.
Yeah.
So we're just getting back to the equilibrium, honestly, if you think about from what, 2016 to 2019 or 2017 to 2019. So I think you just have to compete, and we're still doing deals. I know loan officers that, yes, they're not doing 20 units a month, they're doing 10.
Yeah.
And that's still great, you know what I mean? So the deals are there. Houses before, no houses were coming on the market. Now I got 10.
Yeah.
So people are still selling, and it's all market driven.
And it's not, they're not trying to buy out of in Aspen, right? They're not buying on the coast right now. They're not buying those second homes at inflated prices.
Exactly.
They're buying for their family.
What I was going to add too, you mentioned earlier, if the sky is falling, and I'm going to say the sky did fall about halfway to the ground when the refi boom ended.
Yeah.
So we have way too much capacity in our industry right now too.
Yep.
So that's what's hurting too. There's so much competition because of all that excess capacity. And then the big banks have come back in too, and they're competing much more aggressively too. So the sky fell another quarter way to the ground because of that. So it's a pretty aggressive market right now.
For sure, the people that are moving right now are moving for the exact same reasons that they have been moving since the dawn of time, right? And that's where Revaluate works, is in that sphere where people are. We call it this is cheesy. You guys can laugh if you want. But we call it the data Ds, and you may know some of these. So death, divorce, diapers, diamonds, diplomas, downsizing, discretionary income, the daily grind, dumpsters, right? These are the things that cause people to move. That hasn't changed. Those people are still gonna move. That 5 million plus that we're talking about that are gonna move this year are still out there. And so using data to find those people, to have those conversations, to get the ball rolling is, I think, what we're talking about, and where we are in the present. Those people are still going to be moving.
Yeah, which is why we're big fans of Revaluate. We use you for our own database, and we also, as a big pitch when we develop real estate agent partnerships too, is we sell that as well. So we're big fans of Revaluate for exactly that reason.
Oh, thank you.
You're welcome. Yeah, my pleasure.
So it's this idea of switching from a linear process of get the lead, work it until it closed, now it's done, throw it away, or work it till it's dead, now it's done, versus a customer life cycle and lifetime value.
Quick question: what was the D in dumpster? Like, what's that motivator?
Yeah, it's not uncommon to find. So on the real estate side of the coin, real estate agents have been known to drive neighborhoods looking for dumpsters, because when there is a dumpster in the driveway or out in the street, that is a strong indicator, not all the time, that there's a high propensity that address will be turning over soon. They're remodeling, they're throwing away trash to move out of the place, grandma died, whatever it is, that there's a correlation with dumpsters and moving. How about the future and where we're pointed to in the future, and how we see using data to market to people, and what's going to move the needle in the next 6 to 12 months.
We are focused extremely heavily on technology and also moving a lot of our labor overseas to virtual assistants, something else we're very skilled at. Bring the leads in, we know how to do everything else. We just want to make sure we retain all that business we're getting by being able to offer a low enough rate. And that's going to come down to lowering our costs through technology and virtual assistant help.
So saying that again, lowering the cost via automation and efficiency.
Yes.
And some outsourcing.
Absolutely.
So not building everything in-house.
Yeah, exactly.
Not doing everything in-house.
Well, we'll do it in-house, but we'll use technology to do it in-house. So we'll have a lot of technology partners like what Tammy offers in order to lower our costs.
Right. We
will not be able to compete unless we do that. And I think mortgage banks that aren't on that bandwagon are going to be in a world of hurt. In fact, I don't think it, I know it.
Yeah. Okay.
Yes.
Next 6 to 12 months?
Yeah, and I think one thing that we have to do as an industry is stop being a people problem solving industry and be a technology solving industry. And what I mean by that is our industry tends to throw people at problems and challenges. We just saw it the last 2 years. That's why everyone is just getting shot out of the cannon now, because it just doesn't pencil anymore. And I get it But what I see is we did all this stuff the last 2 years. We didn't stop patting yourself on the back. We didn't do it because we wanted to. We did it because we had to, right? With demand, right? And so what I would say now is that right now there should be a hyper focus on innovation and automation and technology, not removing the human. Technology is not to replace, it's to enhance the experts and the professionals, and that's what we need in our industry. Every other industry does that in some form or fashion, but for some reason we think we're different, and we're not. But had companies started focusing really on technology, Cantor's an excellent example of that, then we wouldn't, the expenses wouldn't be so, because it costs money to fire people. You got to understand that. It costs money for everything that's happening right now. That's why you see a lot of lenders struggle, I think. So that happy medium is that Venn diagram is, you got efficiency, you got effectiveness right there in the middle. That's where you need to focus on, and that's where you need to build.
Efficiency, effectiveness, automation, outsourcing. Okay. I believe in what you're saying, and I think that is the future. I see automation and intelligence driving a plan, right? So that's obviously, we believe very strongly in using data to drive action, right? That's the key. So let's find those customers in their customer life cycle where they're more likely to be moving, and then send them the appropriate message so that a human can work with them and bring the deal in, bring that prospect back in.
Well, that's how you're going to win, because everyone else is going to do exactly what we've always done all the time, right? Be different, right? Stand out. You cannot stand out by doing the same thing as everyone else, right? And a lot of people are going to just use the data to do the same thing, but if you actually use data intelligently, that's when you're going to get to them first, and that's where the ball game is.
Agreed. And no matter how good your technology data gets, you still need somebody to communicate with the borrower because they want their hand held.
Yep.
That's what we're discovered, interestingly, with our super tech-oriented clients in the Bay Area. That they make $300,000–400,000 a year. They're very sophisticated. They have master's degrees, but they still want their hand held throughout the front end of the transaction. So the key is, after we spending all that time on our end to hold their hands, we want to make sure we retain those clients.
Is that going to last? I mean, that's where consumers are today. Is that gonna?
I think it will, because of the size and the importance of the transaction. There are just so many questions. There's a lot more complexity behind the purchase transaction that consumers just aren't aware of, and they want to have those questions answered.
So you can automate up to that handshake. And
exactly, and then you have to have a very skilled consumer interface, a person that does the hand holding.
Awesome. So that's I think a pretty good picture of where we've been, where we are today, and kind of going forward.
So I don't want to get away from data too and Revaluate. So the value adds are key. So that's again why we use Revaluate, because we can share that kind of information with our agent partners, and we're going to continue to share valuable information using all the data we cultivate. But I'm just hyper focused on technology, because I think that's the only way to compete in the future, because rates are going to become more and more of a factor, especially as loan amounts continue to climb. And so if you don't embrace tech in every way, you're not going to be able to survive throughout the long run.
Yep. And when you say you're not going to be able to survive, how many originator contraction are you thinking? If we're at 575 is the last number I heard.
I think we'll see about a 50% contraction, yeah.
In what period of time?
Over the next couple of years.
Yeah. I agree with that, and just to add to what Jay was saying earlier, is that I think what COVID taught us, I think everyone maybe, and even myself included, might have thought like, hey, we're ready for that full automated, technology driven. And I think what happened with COVID is when we all got locked down and we stopped having that human interaction, and all the technology's there. Like, in fact, it's even been enhanced, but I think people have then realized we're not ready to cut off complete human interaction. You do need, no matter where you come from, you want that human interaction. You want to feel comfortable being able to ask a question. It doesn't need to be like the whole time, but you want to be able to have a human to talk to. And I think we all just like, look, we get enough Zoom calls, enough, hey, you're on mute. Like, we've said that how many times? Like, now we really need that human interaction back.
Excellent. Well, thanks very much, Jay, Jason. Very much appreciate your time.
My pleasure.